Good afternoon from London, and hello and welcome to our journey around some of the world's most notable LNG import and export facilities. Each day, LNG is produced on 6 continents and freighted on some 600 LNG carriers to import facilities in more than 40 countries, making it one of the most important components of the global energy industry. And I recognize that many of the participants online today and many of their companies built the global energy industry, and it is great to see colleagues and former colleagues and conference colleagues online today. Within the next 5 years, production will rise from an average about 1.1 million tons per day to more than 1.5 million tons per day, and it won't end there. The signs are that we will keep adding to new liquefaction capacity whilst extending the life of existing projects in long-time producers, even such as Brunei and Algeria, and we will be reducing the carbon footprint of the energy supply chain.
So welcome to the tour, everyone. Over the next 40 minutes or so, we're going to give you views from space of LNG export plants and regasification facilities, along with some statistics and some background information. As we go on our journey, all of us are acutely aware that 2022 is a year like no other due to the Russian invasion of Ukraine, exposing several weaknesses in energy security, as Russian pipeline gas in Europe is now trending towards zero. Spot gas prices are at all-time highs in Europe and Asia. TTF December reached $100 per MMBTU on the 26th of August, and then fell some $30 per MMBTU a week later. These surging volatile prices are threatening bankruptcy for some gas companies and creating the spectre of energy poverty for millions of domestic users in Europe unless governments step in. We're also seeing a switch back to coal burning in many countries, and particularly those who are very sensitive to energy costs in their developing economies. Europe's intent now to phase out Russian gas within a few years, and the crucial stopgap will involve importing a lot more LNG and having LNG in Europe compete with Asian buyers. More than ever, global LNG supply chains are under the spotlight to operate at maximum capacity continuously, and any outages give the markets the jitters. One of the new trends for 2022 is the increase in the signing of new long-term contracts of between 15 and 20 years. It's around 40 million tonnes per annum that has so far been signed by end users and also large portfolio players and traders looking to secure LNG for the long term. From a decarbonisation perspective, there's a lot of debate around the role of natural gas and LNG in the global energy mix, and that's for a period of the next 20 or 30 years. For the most part, the outlook looks very promising. But just before we start our tour, for those of you who are less familiar with LNG, let's have some quick reminders. The first is that LNG is simply natural gas that's been cooled to around minus 161 degrees C, the temperature at which methane liquefies. The volume as a liquid is around 1/600th of the volume as a gas, making it easy to transport on ships and over large distances too. It's stored and transported at atmospheric pressure as a boiling liquid, and it's odorless and colourless. And chemically, it's more than 85% methane with small amounts of ethane, propane, butane, and other minor amounts of other substances. So with that, let's start our journey, and over to you, Andy.
Thank you, Pat. The International Gas Union showed that in 2021, global energy trade increased to 372 million tonnes, and that the main players on the supply side were firstly Australia, that retained its position as the largest exporter, Qatar, and then as Pat will show later, the USA rising by 22 million tonnes to 67 million tonnes. Russia was the world's 4th largest exporter, but we also today cannot but also visit Malaysia, that was in the 5th position. On the demand side, demand was dominated by China, as Pat will explain in a moment and show in a moment. Japan imported 74 million tonnes. The largest global trade flows were in Asia, and European imports although it dropped, we will see the rapid changes that took place in 2022 in a moment. Also recognizing that that important Korean economy relies heavily at 45 million tons on LNG and rapidly growing India. But let's start on the supply side today and go to Australia, the world's largest LNG exporter. Because if we look down at Australia, we see the 10 large LNG plants in operation in the country. Starting on the left, Northwest Shelf and Gorgon and Wheatstone and Pluto, Shell's Prelude, Darwin and Ichthys in the north, and then the three Queensland Island projects of Queensland Curtis, Australia Pacific, and Gladstone. And we start our journey today in Karratha to look at our first visit to the Northwest Shelf joint venture, because here we can see Australia's oldest LNG project at 15 million tons per year, and we can quite clearly see the LNG processing trains from space. We can see the LNG storage tanks, and we can also see the ship loading facilities from where it sails. And the partners of Woodside and BHP and BP and Chevron and Shell and Mitsubishi Mitsui have really done Australia proud over the years. Just to the north is our next visit, which is to Barrow Island, with the location of the Gorgon LNG project operated by Chevron, and below us we can see Barrow Island, and we can also see the long jetty of the LNG plant next to the LNG plant. This was a huge undertaking to develop a liquefaction plant on a remote, environmentally protected island amidst surging material and labor costs. It was achieved at 15.6 million tons per year with considerable cost overruns. Also houses the world's largest CCS facility, carbon capture and storage facility, but which is not yet operated at its design capacity, although sequestration also already began in 2019. We leave the Australian west coast and go to the Australian east coast of Queensland and look down at Curtis Island from space, and below us you can see respectively the Asia Pacific LNG plant, the Queensland Curtis LNG facility, and Gladstone LNG, all constructed by Bechtel, each developed independently based on coal bed methane wells, which required continuous drilling over the life of the project. And this LNG is exported to Japan, to South Korea, to Malaysia, to Singapore, and also sold to the portfolio players of Total and Shell. Australia also boasts a significant floating LNG project. And what we see here is firstly the Prelude floating LNG project operated by Shell. And we see in front of it an LNG carrier being loaded when the tanks on board the floating LNG facility are full. This is Australia's only floating LNG facility, as part of the Design One, Build Many as a Shell mantra in 2011 when the project took FID. So really a bold move that led to the revival of interest in floating LNG. And it was a giant of engineering, design and complexity with an output of 3.6 million tons per year, and also produces LPGs and condensate. Project has struggled with cost, schedule and commissioning and industrial action. And today, if we look back, we see that the advent of the US shale gas revolution has to a large degree displaced the strategy of designing floating LNG plants as a driver to monetize standard remote gas. And FLNG is now much more of a niche concept, and we will cover some of those again later on in our tour. That takes us to the United States. And Pat, you're a specialist in the United States. Why don't you take us on the US tour?
Yes, and indeed, if we look at the US, it's a country that's captured the essence of innovation and speed and scale. It's a country that's gone from 0 LNG exports in 2015 to this year in 2022 becoming the world's largest LNG producer. Cheniere produced the first US LNG cargo in 2016, and by the end of 2022, we now have 7 major plants operating. The US collectively will have 81 million tonnes per annum of capacity online by the end of this year, And there are other plants which are under construction that will take the US to at least 122 million tonnes per annum by the late 2020s. But of course, it's not going to stop there. It's likely that there's going to be much more. New FIDs are in prospect and several could be taken in the next 12 months. In fact, this year alone, there are sponsors in the US who are saying there's up to 60 million tonnes of projects that they earmark to take FID this year. Time will tell on that. But the US has really got all the features of one of the most disruptive commercial business models in global LNG, because it uses a cost build-up model, and it's centered around 115% times the Henry Hub domestic gas price plus X, where X is usually contractually in the range of around $1.75 to $3.50 per MMBTU. That formula covers the cost of liquefaction and also the profit margin for the liquefaction company. But that 115% plus X makes FOB LNG available, which then has got full worldwide destination flexibility to trade. So looking at a map here, you can see the 7 plants in operation today, and they broadly fall into 2 commercial models. The first is the FOB model, which is pioneered by Sabine Pass, Corpus Christi and Calcasieu Pass, where the liquefaction company acquires the feed gas, liquefies it and sells it free on board to off-takers. Then the second model is the tolling model. Cove Point, Elba Island, Freeport and Cameron are projects where the plants actually provide a service to liquefy gas only. It's the off-takers who are responsible for arranging their own gas supply to the plant, and they make a commitment to pay the liquefaction fee plus other variable charges. Both commercial models really require long-term credit-worthy off-takers so that the financing can be secured for the investments. And these facilities can range from $5 billion to $15 billion. There's also a third model which is being developed, the integrated model. And an example of that is Golden Pass, which is under construction. And that's by ExxonMobil and Qatar Energy in Texas. They will be sourcing their own gas, liquefying it, shipping it, and then selling LNG delivered ex-ship into the import markets.
Before we go on our first visit, or before you take the audience, let's remind everybody that they can enter their questions in the Q&A block, and we'll get to that at the end of this session. Back to you, Pat.
Yes, thank you for that. Okay, so our first aerial overview here is Sabine Pass. It was the first project constructed, and today it produces 30 million tonnes per annum from 6 trains. It's located in the Cameron Parish of Louisiana, and it's a 1,000-acre site. And as you can see from this photograph from space, it's close to the Sabine Pass River on the border of Texas and Louisiana, about 7 kilometers away from the open water. It's got a really diverse group of off-takers, about 12 long-term off-takers, and Sabine Pass LNG has been delivered to more than 20 countries. So going from the first project, which started up in the US, to the most recent, and this is the plant here. In 2022, it's Calcasieu Pass, the first project by Venture Global. They have successfully proved the concept of a new lower-cost modular liquefaction build. The plant has been largely built off-site in Italy and assembled in Louisiana. The project always marketed itself on lower liquefaction fees, in fact below $2 per MMBTU, faster commissioning, and the scope to expand. Too good to be true? Well, no. So far, the project is doing really well. And it really built this even through the COVID-19 pandemic and actually exceeded its own construction targets. The plant took 29 months from FID to producing the first LNG cargo, and it's been successfully loading cargoes since February this year. And on the back of this success, Venture Global have already taken FID on their second plant, Plaquemines, and are developing Calcasieu Pass Phase 2. And their off-takers include Shell, ExxonMobil, Sinopec, PGNiG in Poland, and EDF. They have ambitious plans to grow, in fact, as big as Cheniere within the next 5 to 10 years. Here's another plant, and this one located on Quintana Island in Texas. It's the Freeport LNG project, a 13.9 MTPA project, and currently represents about 20% of US liquefaction capacity. Unfortunately, the plant is out of action at the moment due to overpressurization of a pipeline and an explosion and fire which occurred in June this year. The government agencies FERC, the Federal Energy and Regulatory Commission, and the PHMSA, the Pipeline and Hazardous Materials Safety Administration, must each authorize that the repairs are adequate and new safety procedures are put in place before it can restart. And we highlight this because it really underlines how important safety issues are at LNG facilities. The current outlook for this plant is to have a rolling restart from November this year, some 5 months after the incident.
Having covered the two big players, we come back to the one country, small country of Qatar, that is literally biting the bullet to get to the leaderboard and the top of the LNG export ranks, which is Qatar. And Qatar is, as we can see, exported 77 million tons last year, but it's engaged in the expansion of 50 million tons of LNG. And that will take it to 127 million tons. And clearly the Qatar and the US are positioning themselves to be the two biggest countries producing LNG. Let's look down at Ras Laffan in north of Doha. And from space, we can quite clearly see, if you look down in the desert, you can see the RasGas LNG trains. You can see the Qatar Gas LNG trains. We can see the Pearl gas to liquids plant operated by Shell, and the Sasol-driven Oryx GTL plant also in Ras Laffan, as well as the Dolphin gas processing facility, which links the Qatar to the UAE and to Oman. And we can see the energy export facilities in that massive port, the largest such man and woman built port in the world, that evacuates all its energy through the Straits of Hormuz. And this scene in Ras Laffan city is going to change quite dramatically as more and more trains are added. And let's just see what that looks like in terms of LNG trains in the desert. And below us, we can see the RasGas trains 6 and 7 as they operate with such high efficiency and high reliability in the Qatari desert. We continue our journey and go to probably the most talked about fourth player, which is Russia. Russia, which last year exported 29.7 million tons of LNG, has really two very different LNG plants with two very different sets of challenges, both a real success from a cost and schedule and operations integrity point of view. Those are Sakhalin, just north of Japan on the right-hand side, and the Yamal LNG just south of the polar circle on the Yamal Peninsula. We first look down at Sakhalin Island and the southern tip at Prigorodnoye, where we see Russia's first LNG plant, which was built by a combination of Shell, Mitsui, and Mitsubishi, and which Gazprom later acquired a 50% stake, and today it is a subject of difficult sanction situation. And looking down, we can see the two LNG trains and two LNG tanks. We can see a ship loading, either destined for probably Tokyo or Japan or Korea, the two main offtake markets. And we can see the oil export facility. And the international joint venture has been nationalized, and the partners now have to apply to maintain their interests, a new interpretation of country risk. Or we move to the Yamal Peninsula, and below us, we see the work done by Novatek, an independent Russian LNG player that took the lead with Yamal first and now Arctic LNG, both extremely challenging in terms of cold. It is dark for half the year during construction and operation. There's a requirement for transshipment of the LNG, whether you go west to Europe or east towards Asia, and there's a requirement of the opening of the Northeast Sea route to Asia. And Arctic LNG is now embroiled in sanctions stemming from the war in Ukraine. And if we look down, you can clearly see the Yamal trains below us, and you can see a ship loading for transshipment, although this is probably in summer, so less of a transshipment required. That Pat leaves us with the last of the countries that we visit from an export perspective, which is Malaysia. Over to you.
Yes, and what a long-standing LNG success story Malaysia has been. Petronas actually started exporting LNG 39 years ago in 1983 and has built a solid reputation as a reliable top-tier North Asian supplier. In the last few years, it's carried on growing by adding new liquefaction facilities in the form of floating LNG, what we'll be referring to as FLNG throughout the presentation. And this is to commercialize remote gas around Malaysia, offshore Sarawak and Sabah. It's actually got at the moment 2 operational floating liquefaction units, relatively small at around 1.2 to 1.5 MTPA. But in addition to the developments in Malaysia, Petronas also is a 25% partner in LNG Canada in British Columbia. Now, this graphic here is showing you the Bintulu facilities, Satu, Dua, and the Tiga trains. And as I said earlier, it's a very reliable supplier to the North Asian customers in Japan, Korea, and Taiwan. And it's also now expanded its sales base to sell long-term into China and Thailand. And this photograph here is one of the floating liquefaction units. The design is simpler than Prelude. It's taken less time to construct. And you can see from the image just how compact the FLNG unit is. Now, a 3rd unit is under consideration, and Petronas have said that it may take FID on that 3rd unit at the end of this year. So that's it for our quick tour of export facilities. And we're now going to leave those producers and move our tour and focus on LNG importers. And going back to one of our reference charts here, you'll see on the right-hand side some interesting statistics about LNG importers in 2021. And one notable feature of this is that 2021 was the first year ever that saw Japan displaced from the top spot of the largest importer in the world, a position it's held for more than 50 years or so, and it was replaced by China. But to illustrate how quickly things change, 2022 will actually see Japan regain its top spot again as China demand goes down, grappling with zero COVID policy, multiple lockdowns, and surging LNG spot prices, which has seen China revert to more coal burning. China's volumes this year in 2022 are expected to contract, in fact, by about 20%. Now, this image here is put up, I think, to show you the rollout of regasification facilities in China. And it's the scale of the build that is of particular interest. As at mid-2022, there was 89 million tonnes per annum of regas capacity in operation. But what you don't see from this is that there was 92 million tonnes per annum under construction. And in fact, there are plans for up to 250 million tonnes per annum of import capacity, which could be built within the next 10 years. And this would accommodate a very wide range of possible gas import policies. The facts are the Chinese market is a very big and growing gas market. The total market is about 380 BCMA today, similar in size to the European region. And currently, gas is only about 8% of China's total energy. The government definitely has plans to expand it, and the latest stats say it's somewhere within the range of 11 to 15% by 2030. But whichever end of the scale that turns out, it really should create a very positive outlook for LNG import demand into China. And we have a few examples to show you here of import facilities. We're going to hone in on this photograph of the Shenzhen Difu terminal near Guangdong in southern China. It's a 4 MTPA terminal which was approved in 2012, and it sits adjacent to Guangdong. It was built by CNOOC and started up in 2018, but it has actually undergone an ownership change to Pipe China in 2019, who now own 70% of it. And they offer third-party access facilities. The other 30% is owned by the Shenzhen Energy Group. And in fact, this is one of 10 existing and under construction terminals which has been transferred to Pipe China as part of the liberalisation process in the Chinese market. Here's another terminal in China, and our two red bullets here sort of show you the floating storage regas units, the FSRUs that we'll be referring to. And we're in the north of the country now, moving to Tianjin, another CNOOC terminal, and the first of its type as an FSRU. It's quite rare to see FSRUs in China. Most of the regas that we've shown you on the map is land-based. But the Hudong Zhenhua shipyard in China has now built its first FSRU last year. And with a potentially big expansion of regas in China, it's quite likely that we're going to see more FSRUs being adopted.
Just to the east of China sits what was for a long time the country that launched more LNG projects than any other country, Japan, and imported more LNG than any other country, also Japan. And Japan continues to rely on LNG amidst nuclear concerns and along with its decarbonization targets. LNG is currently 37% of total energy supply in Japan. And at times the Japanese cabinet has plans to phase it down to 27% or even 20%. But expectations are that LNG will be needed to keeping it probably at 60 to 70 million tons by the year 2030. Below us, we see the 36 LNG import terminals around the Japanese coast. They've been so constructed to import LNG to coastal cities rather than transmit gas via a national gas transmission system, in part because the country is so mountainous and prone to earthquakes. And there's no better facility to look at from space than the Sodagaura LNG import terminal in Tokyo in Japan. And where you see the three red dots, you can quite clearly see the LNG tanks that have served Japan so well, taking LNG from so many countries for so long. Japan has also used those LNG import facilities to construct a number of very large by world scale gas-fired power plants, often in the size of 5,000 megawatts. And if we go to Futsu LNG import terminal near Tokyo, you can see the Futsu LNG import terminal, and behind it you can see the 5,000 megawatts of combined cycle power plant in Chiba. Now, Pat, that covers Asia. Let's now go to Europe, because everybody talks about Europe, and take the story in Europe further.
Right, thank you, Andy. And as an introduction to that, you can see from our chart here of 2021, Europe was importing a fair amount of LNG, but in 2022, it's all changed. The region is moving from a marginal clearing market for LNG into a market of prime demand. And it's driven by the European need to cut its dependence on Russian gas as soon as possible. Now, there's lots of initiatives on how to cut Russian gas and how to achieve, quite a structural reduction. But probably the most pragmatic solution short term is to rely on more LNG imports. And to give you a sense of scale of what's happening, last year, the European region imported around 79 million tons of LNG. This year to date, it's already exceeded that volume. And it's on course, if it continues its import plan, to get to about 120 million tons of LNG in 2022. And that's what's behind the steep rise in spot prices. Now, our map here gives you a quick overview of the really massive dispersion of LNG terminals throughout Europe. And you can see that our European Union region sort of extends here to the Eastern Med, including Turkey. Very broadly, of all the LNG that comes into Europe, about 60% is imported into Northwest Europe and about 40% into the Mediterranean region. Plans are being fast-tracked to build and expand at least 11 new import terminals, and many will be as FSRUs, with potential for many more. In fact, the first FSRU is arriving in Germany this week and getting ready to be active for winter imports. More than $10 billion has already been committed in the EU to build new infrastructure, which will help improve connectivity between individual terminals and also between countries. But probably the big question for prospective investors of new liquefaction capacity is this going to be a long-term switch to LNG, or is it a short to mid-term switch? After all, the ultimate aim for the EU is to adopt much more renewables. Now, EU buyers have so far this year not tended to sign many 20-year LNG deals, although some HOAs have been signed. And in the news recently, you've probably seen that there's a current impasse between Qatar and Germany as the two governments are discussing LNG supplies, and Qatar wants a 20-year agreement and German government has been seeking a shorter term. I suspect that after this winter's experience of supply-demand balancing, EU governments collectively will probably have to make the call on whether they support LNG formally as a long-term transition fuel, and the signs are they probably will. Now we're going to do a quick tour of some of the import facilities in Europe, and we're going to start our tour here with the Isle of Grain. It is Europe's largest regas terminal at 15 MTPA, situated in the Thames estuary. It started life as a peak shaving plant, and it now supplies about 20% of UK's gas demand. And it doesn't stop there. It's currently expanding and offering new third-party access services. Now, quite different in character is an FSRU project situated in the Med. This is a project that was a very long time in the making because there were so many regulatory and permitting hurdles that threatened the project several times. It's the Toscana FSRU, situated off the Italian coast at Livorno. It's a retrofit of the Gola Frost LNG carrying vessel, and the project started in 2002, but didn't start commercial activities to 2013, and only recently received its full authorization to operate. Well, when I say recently, 2016, some 14 years later. And what we wanted to show you here is that the current German FSRU projects are being really fast-tracked with a plan to go from FID to operation in a matter of about 9 to 12 months. Now switching across to the Eastern Med, here's a picture of the Revituza LNG import terminal, which has been importing LNG since 1999 and mostly from Algeria. It's been expanded in 2007, and in May this year, an FSRU project situated north of Athens at Alexandroupolis is taking FID and will start LNG imports by the end of 2023. Both of these terminals will help Greece and Bulgaria disengage from Russian gas. And looking ahead, there are plans in Greece for even possibly a third terminal, acting again as an FSRU, but between these three terminals would act as an energy hub in the Eastern Med, both to import LNG and then distribute it into the neighbouring Baltic states. Now we're going to move from Greece up into the north to Lithuania, and we move to Klaipėda, where there's an FSRU called the Independence. And this FSRU vessel started up in 2014, and the commercial objective here was for Lithuania to create its own independence and diversify away from Russian gas, and to create new import facilities for Lithuania, Latvia, and Estonia. It's a 3 MTPA unit, and last year it imported around 63% of Lithuania's gas requirements. This year that's heading for 100% as Lithuania cuts itself off from Russian gas. Moving a little bit around the region to Poland now, and the Świnoujście land-based terminal in northwest Poland. This opened in 2016. And it's being expanded from 5 to 7 BCMA in the next 12 months. Again, the commercial objectives were plans to diversify away from Russian gas dependence. And in fact, by the end of 2022, Poland will have no Russian gas imports. Instead, it's switched long-term to mainly Qatari and US supply contracts.
The last country that we cover comprehensively in terms of imports is Korea. And Korea runs 7 LNG import terminals, most of them by KOGAS, for LNG imports. Although increasingly the Korean government is allowing other companies to toll through KOGAS's terminals in a bid to deregulate the industry. And below us, we see those 7 terminals that have really anchored energy supply to this country, which is so reliant on both imported oil and gas for so long. And we pay a visit today to the Incheon LNG receiving terminal, which sits very close to Seoul, just west of it in the sea at Incheon. It is the world's largest LNG terminal as a receiving complex. And we can see an LNG ship offloading in the foreground, and in the background we can see the very large number of LNG storage tanks above ground and submerged in the soil to keep Seoul, Incheon, and the northern part of the Republic of Korea, of South Korea, energized. Now, it's also important to look at, for a moment, at the emerging market of India, because new LNG import terminals are emerging on the Indian east and west coast. And we can see on the west coast the Mundra, Dahej, the Hazira, the Dabhol, and Kochi terminals, and also the singular terminal on the east coast at Ennore. And all the big Indian energy players, whether it is GAIL or Petronet or the Indian Oil Company or GSPC or the National Thermal Power Corporation or Adani, have stakes in these terminals. But we can see that there's been a lack of progress with terminals on the east coast due to uncertain demand over the last roughly 20 years. If we pay a quick visit to firstly Dahej, we see India's largest terminal as run by Petronet, and you can see the ship offloading facilities on the left and the storage tanks on the right. And it is now being expanded with strong ties to Qatargas and ExxonMobil for supply. Or we look down on the Hazira LNG receiving terminal, which was a Shell initiative as a market builder in India in the 2000s, sold down the path to Total, but now Shell operates and owns it all, mostly operating on the spot and short-term supply market, also being expanded. And you can see an LNG carrier offloading, and you can see the storage tanks on the right. Those were the established exporting markets and the established importing markets, but there's a significant new LNG export and import infrastructure being added in the developed and in the emerging markets. And let's quickly pay a visit to 7 projects in 5 countries. We first go to Kitimat in Canada, in British Columbia. And below us, we can see the Rio Tinto aluminum smelter, the LNG plant site, where the plant is under construction, and the LNG export jetties onto the Douglas Channel. And today, major pieces of equipment are arriving as this plant is now in full commissioning to be exporting in the very near future. Or we move to Mozambique in Africa, and Pat, over to you.
Yes, and through the lens here, you can see what is a really exciting development for a new exporting country, Mozambique, a country with high proven gas reserves and starting as an absolute greenfield in terms of infrastructure. There's 2 projects in the country which are under construction, a land-based 12 MTPA plant in the north at Pemba, which is led by TotalEnergies, and a 3.4 MTPA floating liquefaction project that you see in this photograph here, led by ENI, called the Coral Sul FLNG. And the plans are to start this FLNG up in 2022, and loading could be in the next few months or so of the commissioning cargo. What's really interesting here is that the FLNG has been financed 60% by commercial banks. So it's the first FLNG financing, and also in Mozambique as a new country. The overall project costs are around $5.3 billion, estimated at that. And ENI are already contemplating a second FLNG unit for the country too. Now I'm going to switch from exporters who are emerging to importers. And although this isn't a brand new importer, it's showcased today because it really sort of faces a lot of struggles which many other new importers also face. And it is Pakistan. And we're going to look at that as an example of an emerging market. The initial drive to import LNG was the result of depleting domestic reserves, and gas was needed urgently for power generation and to promote the economy. The answers seem to lie in FSRUs, and there are two functioning at Port Qasim near Karachi. You can see here from the photograph of one of the FSRUs. Imports started in 2017, and there were high expectations that 5 terminals would be built with lots of private investment, including from Qatar. But regulatory issues, pipeline investments, which would take the gas from the south of the country up to the north, which was the main demand centre, and more recently, the spiralling costs of LNG have all held Pakistan back. And they haven't reached their goals of 20 million tonnes per annum of imports by 2025. In fact, last year, Pakistan imported 8.3 million tonnes of LNG, and this year it looks as though it'll be even less.
When Pat earlier showed the European map, it was evident that there were no LNG import terminals in Germany. And Germany is now pursuing 5 floating storage and regasification units, all being fast-tracked. And for those wondering where those are, they are coincidentally quite near to where the Nord Stream 1 and Nord Stream 2 pipelines would enter Germany at Greifswald, just to the west of that at Brunsbüttel, at Wilhelmshaven and in Stade. And the infrastructure to connect the FSRUs is already being put into place.
We're now going to switch continents and move over to another example of an emerging market and an interesting business model. And we're now in South America, and we're going to show you an example of the first of its kind private gas to power project in Sergipe in the northeast region of Brazil. The project is made up of a 1,500 megawatt combined cycle natural gas power plant, a 33-kilometre transmission line, and an FSRU, the Gola Nanook, all commissioned in 2020. The project was conceived when Gola was looking at new long-term deployment for their FSRUs. And they chose to deploy quite a large FSRU, initially to meet the long-term requirements of the power station, but also to be there as an entrepot supplier for other smaller buyers along the coast. Gola Power developed the project with Celsey, but there have been some changes in ownership. Gola Power sold their assets to new FutureEnergy, who are in turn now in the process of selling the power plant to Eneva, a Brazilian power company.
Just to the south of that, in the province of Rio de Janeiro, the Porto de Acu LNG import and regasification terminal is also plays an important role in making sure that the lights stay on in Brazil as the country deals with both the intermittency of hydro as the most reliant continent on hydro of all the continents, but also deals with the current drought. And what we see here is an LNG carrier that has brought in a cargo to be offloaded into a floating storage and regasification unit, the BW Magna. And this LNG to power project drives 3,000 megawatts of inland power generation to help Brazil maintain reliability. But against that background, the question that we often ask is, so where do all these ships and FSRUs come from? Because there are 600 actively traded LNG vessels and a further 238 on order and a further 53 FSRUs in operation, and all of that needs to be constructed. And the shipyards in both Korea and in China are now building to rapidly expand the LNG fleet with new build vessels. And let's for a moment just look at 2 of those shipyards. The first one is probably the most impressive of them all, the Samsung Goji shipyard in South Korea. South Korea not only has Samsung, but there's also the Hyundai and Daewoo yards around the coast of the country. But Goji remains the most impressive for me in the world, because we can, on the one hand, see the two construction docks that below us, where the hulls are assembled. But behind that, we can see the very large number of ships simultaneously and in parallel being outfitted and completed at anchor at various quays in the yard. And significantly, that means that Samsung, but like Hyundai and like Daewoo and like the Chinese yards, now can construct floating LNG vessels, LNG carriers, LNG fueled ships, and FSRUs to make sure that there is the capacity to supply the global LNG industry. We skip across into China and we go to the Hudong Zonghua yard, which is a subsidiary of the China State Shipbuilding Corporation in Shanghai. This was triggered originally in terms of shipbuilding when Northwest Shelf had the first energy carrier for the Guangdong project built there. And the industry has come a long way since then. Yards are extremely full. And in the background, you can see 2 LNG carriers being completed. That completes our journey today. And before we look just at what lies ahead, let me for a moment just reflect on the global gas trade and movements of gas. What we see on this maps tracked by BP, firstly, is 2 colors of lines, the flow of pipeline gas in red and the flow of LNG in blue. And what we can clearly see, firstly, is the large number of lines going both west and east into China out of Russia, either in the form of red pipelines or blue LNG flows that we examined earlier. We see on the right-hand side the very significant concentration of demand for LNG into the 3 countries of Korea and Japan and China, and also Vietnam and also Thailand that we did not cover today. We can see the very significant flows which are being so dramatically rearranged right now into Europe of both pipeline gas and LNG. And if we look at the balance between gas supplied by pipeline, 704 BCM, you can see that still at this time outstrips the gas supplied in the form of LNG at 516 BCM in the world. But let's also just remind ourselves what the bigger energy picture in the world looks like. On this Wednesday, when we speak to each other, 31% of world primary energy comes from oil, 27% from coal, 7% from nuclear, renewables, including geothermal, about 7%, nuclear at 4%, and we see that gas in total makes up 24% of global supply. The domestic gas piece, especially in North America and in Russia and in China and in Europe, is still the largest. And on a large scale, all the infrastructure that we've seen today for LNG that is being expanded so rapidly, and we've seen that LNG will grow faster than coal, LNG will grow faster than oil, but it will probably grow slower than renewables into the future. And that's the current situation. But Pat, as you look forward to LNG, what do you see?
Well, it's a brave person, I think, who tries to say what happens next. First of all, 2022 is shaping up to be a year like no other. But fundamentally, the LNG industry is performing quite well. And as you said at the beginning of this talk and tour, about 1.1 million tonnes of LNG is being produced and shipped every day of the year. And term customers are being supplied reliably. And that's going to continue. The shock of 2022 has really come through the LNG spot markets. It's exposed a lot of weaknesses and a lot of stresses of when markets are pushed to their limits. And this year to date, we've seen supply scarcity, we've seen rising prices, we've seen volatile prices, where a single cargo can change in value between $80 and $100 million a day. It's spooked the market a lot. There's low liquidity, and all the pricing differentials between markets have changed dramatically and quickly. quite a few traders will say the spot market's broken at the moment. But throughout all of this, and it really is, a period of the most incredible sort of behavior in the spot markets, there's still a lot of pragmatism for LNG. After all, it's hundreds of billions of dollars of capital that we need to attract to invest in it. And ours is going to continue to be a long-term business. Now, from the demand perspective, the high prices have forced some demand destruction, and particularly so in some Asian markets, which were emerging as potentially new buyers of LNG. Some of these countries simply can't afford to buy LNG at the current prices or those on the forward curve, and they have reverted back to coal and they've deferred some of their projects. It's hoped that some of them are deferred, not cancelled. But on the positive side, we've also seen a lot of Asian buyers step up and commit to long-term LNG this year, particularly so from China and particularly so from US LNG projects. And I think this symbolises that what's coming next is the sort of importance still of supply security and adding new long-term stability for projects and their investors. GHG remission initiatives have been put on hold in some countries who are just struggling to try to get energy security back in balance. But there are majors like ExxonMobil who are still pushing through very quickly with their plans for CCS to decarbonise the LNG supply chain. Where to next? Well, for sure, I think Qatar and US are going to continue to play very significant roles, adding new capacity throughout the 2020s. They are simply the right projects at the right time. But there's other countries too, like we showcased Mozambique for one, but also Papua New Guinea and Tanzania, who I think will all be looking to develop their LNG businesses too. And lastly, as a business, LNG always pushes at its technical and commercial boundaries. And something I think this tour has shown that the LNG industry is very good at. Both are going to play a crucial role in our business going forward to keep it relevant all the way through restoring energy security and also energy transitions. So it may be that our tour is coming to an end right now, but our next one, I'm sure, is going to showcase for you all the drive and I believe the success to grow significantly our business and decarbonise the full LNG supply chain at the same time. So I think, Andy, that's sort of where I'm at with it. I think I should pass it back now to you to chair and handle our questions and answers.